Welcome to a deep dive. We're focusing today on cutting through some of that complexity around financial oversight.
Right.
You always hear about the Federal Reserve, the SEC, but today's mission is really for you, understanding the critical role of state financial control right here in the USA.
That's exactly right. The U.S. system, well, it's a myriad of agencies, isn't it?
It really is.
And while federal agencies, yeah, they often supersede state power, if you're looking for clarity on, say, direct consumer protection or local business licensing, well, you've got to look beyond D.C.
Okay.
The goal for all of them, really, federal and state, is transparency in the markets, stopping fraud. So let's unpack these sources, define what these state institutions actually do.
All right, let's start with banks. We know the federal regulators are kind of the heavy hitters, but what are the state bank regulators actually doing day to day? I mean, isn't there overlap with the FDIC and federal charters?
Well, what's fascinating here is this idea of the dual banking system. That's key.
Dual banking.
Yeah. Banks basically have either a state or a federal charter. And if a bank holds a state charter, it's primarily accountable to that state's regulator first.
Okay.
So these state regulators, they operate very similarly to the federal ones, but their oversight is just fundamental to how the whole system works together.
And the scale they operate on.
Yeah.
It's not small potatoes. Our sources point to the New York State Department of Financial Services, the DFS. Just that one state agency supervises institutions with assets, get this, over $3.3 trillion.
Trillion, yeah.
Wait, $3.3 trillion, that's bigger than the GDP of quite a few countries. It really reframes what state level means, doesn't it?
It absolutely does. It highlights their power, their reach.
Yeah.
Now, if we connect that banking role to the bigger picture of capital markets.
Right.
State securities regulators also play a really critical role. They complement the federal agencies like the SEC and FINRA by focusing much more on the local investment market.
Okay, so if the SEC is handling the really big players, the national exchanges,
Yeah.
who are the state authorities actually regulating then?
They're doing that detailed ground-level consumer protection work, specifically. They register and oversee investment advisors who are not required to register with the SEC.
Ah, okay.
Usually because they manage maybe smaller amounts of capital, or perhaps they operate entirely within just one state. They really fill those crucial regulatory gaps,
Making sure that even local investment pros are accountable.
Exactly. Someone's watching.
Now, this is where the story usually kind of leans towards federal power being supreme in finance, but is there any major sector where state regulation is actually the rule, like full stop?
Absolutely. And here's maybe the surprise for some listeners, the insurance industry.
Insurance, really?
This massive sector is primarily state regulated, not federal. State regulators monitor, they review, they oversee all the insurance businesses operating within their state.
Wow.
They handle everything from making sure rates are fair to protecting consumers directly, even conducting criminal investigations if needed.
That's a huge distinction from, say, banking or securities. So their duties include licensing, too, for the companies and the salespeople.
Precisely. Licensing for businesses, licensing for individual agents and brokers. It provides a really direct line of consumer protection at the local level.
And the structure, is it the same everywhere?
Well, the role is always the same, protect the local consumer. But our sources show the organization can vary. You've got states like New York, Vermont, Florida. They've combined agencies like that DFS we talked about.
Right, the one with the trillions.
Yeah. They regulate both financial firms and insurers under one roof. But then other states, they keep totally separate departments for banking, securities, and insurance.
Interesting. So, okay, let's try to synthesize this for you, the listener. What does it all mean? We learned the financial ecosystem is, well, dense.
Definitely dense.
And while the Federal Reserve's reach is obviously strong, these state agencies are handling enormous amounts of capital and providing really essential direct consumer protection, especially, as you said, in that huge insurance sector where they are the primary authority.
Right. We've hopefully established that the system is designed really as a deliberate balance. It's not meant to be a competition. State authorities often have these really far-reaching specialized responsibilities that deal directly with local businesses and consumer licensing.
So this brings up an important question for you to think about. Even though federal policies usually, technically, supersede state ones, given that state responsibilities are so specialized and local, covering things like licensing your specific financial advisor or regulating your entire home or auto insurance market, which level of regulation, federal or state, do you think actually has the most immediate, tangible impact on your personal financial life day to day?
That's definitely some food for thought. Thanks for diving deep with us today.